Crypto giant FTX has started the process of filing for Chapter 11 bankruptcy, with founder Sam Bankman-Fried stepping down as CEO. The filing represents a staggering turn for the cryptocurrency exchange, once reportedly valued at about $30 billion. To find out what the FTX fallout could mean for the rest of the crypto industry, joining us now is Brian Mossoff, CEO of Ether Capital and president of the Canadian Web3 Council. Great to speak with you today, Brian.
Thanks for having me here. Unfortunately, I wish it was under better conditions, but happy to chat as always.
Yeah, what do you make of what has been going down in the industry this week? It has been just such a week in terms of very quick developments at FTX and a lot of uncertainty rippling elsewhere as well.
This is a rapidly evolving story, as many people know. It's making headlines everywhere. It's something that no one expected. This is the world's second largest exchange, one of the most trusted brands for institutional investors, retail investors. So it's unfortunate. I've been around the space for a long time. I was there when Mt. Gox collapsed. This is a much larger order of magnitude because of how much buy-in there's been into the space in the last couple of years. And I think it's going to send a chilling effect for a number of months and potentially years. And the space will retract, but it will build back better because of this.
If the issues were so deep, why do you think no one expected it, like you said?
I think what we have here is a lack of governance and oversight. What I'd hope is that there's an opportunity here to recognize what regulation was in place. In Canada, we have very specific rules and paths towards registration for our local exchanges. And one key here is that because we don't have necessarily exactly all the pieces of the puzzle worked out, it sends other investors into foreign jurisdictions, foreign platforms. Most of the trading was taking place on FTX International. And so if we can tighten up the regulation in Canada, if we can figure out exactly how to offer retail investors and institutions better offerings here, they won't seek out foreign exchanges that don't have the same oversight. So there's an opportunity here, but it's going to take some time.
What do you think would have made a difference? And I know there hasn't been a ton of transparency around everything that went down or the financials at the company or what have you for us to necessarily be able to dig too deep into that. But is there something that you think that could have been maybe some low-hanging fruit here in terms of what could have helped?
Well, certainly you had two very related parties between Alameda Research and FTX, two entities where Sam Bankman-Fried essentially kicked off both of them. And they were very intertwined, and there wasn't appropriate separation and oversight between what the appropriate relationship was going to be, how they would lend or not lend to one another, what assets could move between those two entities. And that's the problem. There was no transparency into this versus something, let's say, like DeFi, true decentralized finance, where people can see what's happening in the order books, they can see where the assets are being held. And so here, this is essentially a centralized traditional financial business or business model operating in the crypto space. And unfortunately, with a lot of leverage and just bad practices in place, the whole thing, as we're witnessing, is collapsing in front of us very quickly. So
for investors who want to be a part of this space, internationally perhaps, what can they do for themselves to, get through this time? I mean, not necessarily speaking directly about FTX, but just, how do you evaluate on your own if you can't get, access to what is necessarily going on at a company?
And this is, of course, a very challenging thing because this was one of the most trusted brands in the space. A lot of people, big institutions, powerful people in the space trusted this entity, this group of people. They were working closely with U.S. lawmakers on frameworks and regulation and driving that forward. So it's really a shock. What I do think this highlights, though, is why people need to either have diversification of their funds, perhaps they should hold them in a self-hosted wallet and kind of have the space go back to its roots, that these are digital bearer assets that people can take possession of, they can hold them on their own, not rely on centralized third parties, they can diversify across multiple custodians or multiple exchanges if they feel more comfortable with that. But I encourage people not to just leave the space and give up just because of this event. Yes, it will, as I was saying, take time time to build itself back up. But the space is here to stay, and it may take time. But the space is an important asset. It's going to be an important part of the internet and finance, and it may take years. But it's important that investors continue to say, maybe I don't need so much exposure in my portfolio to the asset class, but I shouldn't write it off just because of one bad actor.
Yeah, do you think that there could be some permanent damage, though, in terms of the risk appetite that people have for crypto?
Certainly, there's going to be pens down across a lot of institutional investors who are just warming up and starting to trust the space. I think a lot of those investors first decided not to own the tokens like Bitcoin and Ether, and instead said that they wanted to play the picks and shovels of the industry. And one thing that I'm constantly trying to help people understand is that there's very little chance where Bitcoin and ETH will fail, but these crypto-based businesses will succeed. Rather, it's a high chance that some of those centralized businesses will falter, but Bitcoin and ETH, will do well in the long run. So if we can shift those investors' thinking towards building their initial positions or part of their portfolio in this space around direct token ownership and figuring out what that looks like and how it would be appropriate for them with their internal controls versus just buying some equities or investing in some businesses, I think that'll be helpful. But what's really key here is that they don't just give up and walk away, even though they're currently spooked.
Interesting. Yeah, and do as much homework as you possibly can for any sort of investment, of course. Brian, thanks so much for your thoughts on this today. We appreciate your time.